Welcome to the Straight to the Point podcast, where your hosts, Dr. Paul Lawrence and Dr. Tyler Piron, will take a condensed look into some of the pressing, commonly asked questions from within our veteran community. Join Paul and Tyler as they get straight to the point to bring clarity and a better understanding to intriguing topics. Now, here are your hosts, Dr. Paul Lawrence and Dr. Tyler Piron.
Welcome back to Straight to the Point with Coming Home Well. We, as always, have Dr. Paul Lawrence, the former Undersecretary for Benefits at the Veterans Affairs. I always keep wanting to say Veterans Benefits and all the other names. I know the name changed a few years ago, but we have an important topic that we have decided that we really think you should really think about. It's home ownership. Now, if you've been paying attention to the news or if you're thinking about buying a house, it's expensive and it's hard. The interest rates are going through the roof, especially compared to a few years ago. But veterans have a great program, and we're going to talk about that. And it is worth a lot of money, and it is definitely worth something to look into. Paul, what are some of the things that we should think about when it comes to benefits with buying a home for veterans?
Yeah, so the benefit we want to talk about today is what's known as the home loan guarantee benefit. But really, that's a fancy term for the ability to purchase a home with no money down. But let's take a step back, Tyler, and talk about, the value of home ownership. So let's start like qualitative, right?
Mm-hmm.
So a home provides safety and shelter. You do this well, you live in a great neighborhood, a community, you can connect, raise your kids, great schools, and sometimes that connectivity can replace some of the things you might have lost when you left the military. Hey, I belong. And so it has a very qualitative nature that I think veterans can understand, okay? And there's also sort of like the simple economics of it. I mean, a home may very well be the most valuable asset in any veteran's portfolio. And I think folks need to appreciate this. So it's not just a place to live, but it can really, increase your net wealth. So think of just a very simple example, right? You purchase your home for $500,000, which is about an average price in the United States now, right?
Which is crazy.
Yeah, well,
But yeah, that is average.
yeah, some places lower, some places higher, right? And all the good that comes with that. You live in it. Some period of time later, you sell your home for $600,000. That $100,000 that's left over, I mean, I'm ignoring the tax consequences, but they are not that much, right? Is essentially your money, right? So you can use that for finance your kids' college education, perhaps open a business, retirement, right? So it's a really important asset. So it has a qualitative nature, good place to live, raise kids, do that, and a quantitative nature in terms of potentially increasing your net wealth. All right. So that's like the basis of that we're going to talk about. Now, if you're a civilian, a non-veteran, the way you go about purchasing a home is you don't show up with $500,000. You approach a financial institution, a bank or a mortgage company, and they will loan you the money, right? And they'll, hey, we'll loan you $500,000 and you'll pay it back over a period of time. 30 years is sort of standard. They're now longer. Some are shorter. Depends upon, your ability to pay, right? So that's called a mortgage. We all kind of know of that, right? But as a civilian, you often have to put down a down payment. And this can range from, say, 10, 5, 10, but as much as 20% used to be standard back in the day. So you can see on the $500,000 home, 20% is $100,000. So before
And
you
you'd
can
have
go,
to have that $100,000 in cash when you go to buy the house.
right. So just think about that. If you're a civilian, you say, I want to buy a home, you've got to save $100,000. So you've got to avoid buying things. You've got to defer whatever while you save en route for this $100,000, the example we're talking about. That's really hard, right? And so you
Mhm.
might set out with a plan and maybe you'll fail. And if you fail, you'll never own a home. Okay. So really, your ability to do this is a function of, and it could take multiple years, most likely multiple years to do that, right? So here's where the benefit from serving in the military really comes into play, because as a veteran, you can purchase a home with no money down. It's called the home loan guarantee because VA guarantees the down payment, right? If something happens, VA purchases the home back. So you approach a lender and say, I want to buy a home. You can do this immediately when this benefit is available to you. No money down. And unlike a civilian, you don't have to pay what's called private mortgage insurance. If you're a civilian, they sort of wonder, can you pay this back? Well, there's another set of insurances we're going to make you buy in case you don't. But because they know the VA has guaranteed the down payment, you don't have to pay for this private mortgage insurance. And that can be a significant monthly payment. You avoid that. And often, as you pointed out, interest rates are going up. But generally, when you use the home loan guarantee, you get a little bit of a haircut on the interest rate. You can generally get a somewhat lower interest rate. So it really is a pretty good deal conceptually.
So I know with the VA loans, if you have a disability, they waive the funding fee. But what is the funding fee, and how does that apply?
Yeah, let's go through the economics of this, right? So okay, so now you got your like, hey, I served honorably or whatever. I got this, I got the home, I want to do whatever. What does it depend upon, right?
Mhm.
Well, the VA does not give you your mortgage, right? They only guarantee it. So you've got to go to a bank or an institution and get a mortgage. And they're going to say, okay, we're going to look at two things. We're going to look at your credit score, right? Because that's going to tell us about your ability to repay, your history of repayment. And you remember, everybody gets this on their statements or whatever. Hey, look at your credit score. It's between the number 300 and 850. Higher the number is better generally. There's no minimum to use the home loan guarantee, but the financial institution will have requirements, right? And they'll probably also look at your other payment history for your utility bills and if you have a car loan and the like. So they'll look and make sure you're credit worthy. Then they're also going to do something, which is, it's funny. The term is called, you have sufficient income, but there's really no minimum income. What they do is look at what's called the debt to income ratio. Okay. And so it's, your debt divided by your income. So let's make it simple. Let's say you make $3,000 a month and your debt's $1,000. 1,000 over 3,000 is 33%, right? So
Mhm.
they'll look at that percentage and say, does it exceed 41%? Because if it exceeds 41%, we worry that, you're paying other debts and now you get a mortgage. It will be too much. Financial institutions will have their own numbers, but they'll look at two things, essentially your credit worthiness and your debt to income ratio. Okay. That's the two things they're going to look at before they will approve you. Okay. So again, there's a great benefit because you don't have no money down, you don't have to save, but you really do have to have your financial act together to be able to get a mortgage.
Right.
Okay.
So if the mortgage is like 2,500 a month and you make 3,000 a month, they go, hey, this is probably a little bit too much house for you. Because
This
then
is
you have
not
to
going to
pay
work.
insurance, electricity, all the other things. You're not going to have enough money.
Yeah. So then let's go through kind of what happens and we'll get to the funding fee kind of last. Okay. So what goes through? Okay. So we're going to go through the steps real quick here. You have to obtain your certificate of eligibility from the VA, and we can talk about that in a minute. Okay. Select the lender, find a home, get the home appraised by the VA, and we'll talk about that in a second. Confirm your loan is approved, then close on your home and move in. Okay. So you can see you've had to touch the VA 2 times.
Mhm.
So things could go wrong at that point. So let's explain it. Okay. You get your certificate of eligibility from the VA. And actually, you can do this online at va.gov, and it works very, very fast. Generally, these things are done in like minutes. Okay. You can do it on a mail-in form. And often your lender, if they're connected to the VA system, can do this for you. Okay.
Mhm.
But basically, this confirms that you, in fact, are eligible to use the home loan guarantee. So you often have to produce some information about your service to include your DD 214. Okay. So you got this. Now you have your COE. You're ready to go. Found the home. Now, the home has to be appraised by a VA approved appraiser, because you can imagine they want to make sure it's equal to, the appraisal is equal to or greater than the amount you're going to purchase, right? So if your $500,000 home appraises for $500,000, great. If it appraises for $550,000, way to go. You've gotten a good deal. But if it appraises for less, you're going to have some problems because you're going to have to figure this one out, because you're not going to get a mortgage for $500,000 if the VA approved appraiser appraises it for $450,000.
And this
So the
is
whole,
really just to protect you from getting railroaded or tricked or something like that.
yeah, it can be frustrating, but it's exactly that. So the good news is, by dealing with the VA, you actually have some protections, and exactly what you said. They're not going to let you buy a home that's not equal to the appraised value, right? So some people give up and they go, no harm, no foul. I'll go find another home. Sometimes they renegotiate with the seller. Sometimes they just come up with more money and say, fine, I really love this home. I'll pay for it out of pocket. So there's a lot of different options, but
Mhm.
to include choosing a new home. Now, what does this cost? That's the question you were asking, the funding fee. So on every one of these mortgages, VA charges what's called a funding fee. And the funding fee is essentially how they administer the program, right? So it's a funding fee. Now, the funding fee is kind of hard to calculate. And again, you can find this on va.gov, but it's a function of two things, really. How many times have you used the program? If this is your first time or your second or more time. And how much is your down payment? Because even though you couldn't put no money down, some people put money down, okay? They will look at this and say, hey, it's 1% or a 2 or something like that, okay? And the choices are you can write a check at closing, or what most people do is they roll it into the mortgage. Okay. So your mortgage is for $500,000. Hey, it could be $10,000 funding fee. They make the mortgage $510,000 in our example. Okay. And that's kind of a standard thing. And you pay it over 30 years. And so it's an extra $2 a month on your mortgage. And it all kind of works out well. Now, what you're asking is the funding fee ever waived? And the answer is yes, it can be. Okay. And it's generally if you are service connected, you have a disability that's recognized by VA, and your funding fee will be waived. And again, you can find out more about that at va.gov. But here's an interesting thing that your viewers or your listeners should pay attention to, which is if you start the process of purchasing your home and your application for disability compensation is in place, okay, you'll purchase your home as if you are not disabled. But later, you might get approved for disability compensation. You need to go back and get your funding fee returned to you. Okay. And so it's very important if you're in the process of applying for disability compensation while you're purchasing a home, you have to let everybody know that, because, you're not technically service connected yet, and you'll have to pay the funding fee, but you will be at one point, and you will be able to get your funding fee returned to you. So
as long as you've submitted that claim prior to buying it, and then it takes a year, and you bought a house after 4 months, a year later, they said, yep, you've got disability. Whatever they charged you for funding fee, they're going to send you a check.
Something like that, or they'll rebid it to your mortgage. But the point is, if your claim had instantly been approved 2 weeks into the process, you would have checked, yes, I'm service connected, and the funding fee would have been waived. They're trying hard not to penalize you while the processing takes a little bit longer. So, and again, the VA there's information online, but VA has a bunch of folks who are like home purchase experts, and you can call them at 877, let me find the number, 877-827-3702. And they can help you, talk you through this process. They can make sure you have the right paperwork. They can talk to your lender if necessary. So they really do try to help folks execute a home purchase, if that is truly what they want to do. So again, it's a great benefit. It has so many positive features to it that veterans really need to appreciate it. Even during difficult high interest rate times like we are now, interest rates will go down in the future, and you can refinance and get a lower interest rate.
So I see all these positives. I've used the VA home loan guarantee. It's absolutely fantastic, but there has to be some downsides. What are some of the potential downsides of using the VA loan?
There's not really downsides with the process. There's more downsides in the following sense, which is, sadly, not every veteran should own a home. Like, they are not able to manage the finances. They don't understand the maintenance is what's required. So, veterans own something like this. I might have the numbers wrong. Home ownership in the United States is something like 50 to 60%, but veterans are like 74, 75%. So veterans own home at a higher rate. But again, not every veteran can own a home. Sadly, veterans do foreclose, get their mortgage foreclosed on. They cannot make the payments. They're just unable to deal with this. So you really need to look carefully. I mean, tremendous positive, but again, your credit score will be tremendously affected if you have your home foreclosed on, right? It'll be a pretty emotional experience as well. So you really need to think carefully about it and make sure it really does help you with your, where you want to be financially.
And it has to make sense in your particular circumstance. Obviously, paying rent, you're paying someone else's mortgage. So there's always going to be more cost. But if you're not going to be in a particular place for long enough for you to make up the initial costs that happen with any loan, 4 or 5 years, 3 to 4 years, depending, it may not be right decision for you to buy a home. But if you're planning on staying somewhere 5, 10 years or more, you absolutely should look into it and find a home that's right for you, especially in the longer term, because then everything is on you, but you have to plan for the maintenance. You have to plan for all these additional costs that may be incorporated in your rent.
Right.
So it takes a little bit more planning, but it is the number one way that people accumulate wealth in America.
Right, right. And what's really interesting is in this period of time when when rents are going up, home
Mhm.
ownership actually becomes more attractive because you might find, well, I have a high rental payment, maybe that high mortgage payment isn't that such a stretch. And also, as we all know, mortgage interest, the interest you pay on your mortgage is tax deductible. So it has another kind of feature that makes it actually less costly when you do your taxes. So again, I think, we should always invite and veterans, talk to real estate agents, talk to your tax people, but be aware of this. I mean, 74% of the veterans, you, me, like a lot of people have figured this one out. It was a great benefit that goes all the way back to the original GI Bill, 1944, right? They understood how valuable home ownership would be to our veterans and what a great benefit it would be. And it has really turned out to be that way.
And this is an important point. You can use it more than once, but not on more than one home at a time.
That's correct. That's correct. And under special circumstances, if you used it once and you defaulted, you can contact them and you might be able to use it again. I don't remember exactly the circumstances, but you're never out of totally in the penalty box.
Paul, that's one of the things that I've learned most from you is that, yes, we think there's some hard and fast rules, but the VA has a lot of grace built into a lot of the rules based on the particular circumstances, because they just want to do what's best for veterans. They have to follow their rules, but there's a lot of opportunity to take things into consideration.
Right. And I think grace is a good word because, of course, folks understand the military. Hey, I got deployed. I got this. Things changed in my life. They get it. You're right. So again, not everybody gets a get out of jail free card, but there are circumstances. And again, this is a pretty powerful benefit. So, I think your listeners I would encourage them kick the tires on this and see if it makes sense.
Paul, I leave you with the last word. Is there anything else we should know about the VA's guarantee of home loans?
No, there's a lot of other features too. We've gone over it. You can use it. And folks could find out more in my book, for example, or others. You can use it on mobile homes. You can use it for farms under certain circumstances. I mean, again, it's not just a traditional home. So again, you can even use it on multifamily housing. So you could buy an apartment building, live in one, and then rent the other ones out. So there's a lot of different ways you could think about this. And so again, it is finally a lot of folks. We said this earlier, use the equity to start that business they've always imagined. So again, you want to be a vetrepreneur, as they say. You'd be surprised what your home about what you could get out of your home.
Thank you so much for joining us on Straight to the Point with Coming Home Well and Dr. Paul Lawrence. I'm Tyler Piron. Thank you so much for joining us on Coming Home Well.
Thanks for joining us on Straight to the Point with Dr. Paul Lawrence and Dr. Tyler Piron. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and a review. Want to keep up with Dr. Lawrence? Connect with him on LinkedIn.